Hey everybody, my name is Kenneth and I've been trading stocks for the last 11 years and investing for over 20. So if you're interested in learning how to do this, make sure you hit that subscribe. Now you can see right here a stock that I would like to buy, but you can see also that it is on a downtrend. So when do I buy it, right? People always say you can't predict the markets, you can't time the bottoms. I'm going to show you how I use technical analysis to maybe make a trade in this company. So the first thing I do, and by the way, this is TD Ameritrade's Thinkorswim software. First thing I do is I go right to the top, the high, the most recent high, which is $5.03. I right click, add drawing, and I go down to this percentage sign, which is Fibonacci retracements. Click on it, and then you drag it to the most recent low, which is 375. Click on it, and it drops. Now these become these Fibonacci retracements, 61.8, 50%, 38.2. These Fibonacci retracements become support or resistance lines for you as a trader. So you can see right now that this stock is kind of maybe a little bit. I mean, it's 10:30 in the morning on Friday, February 18th. So too soon to tell, but short term it seems like it could be consolidating here on this support line. But what I want is I want to buy it down here on this support line in the $4.20 range. Reason being, this is that its most recent past support line was here. So I would like to buy it here, ideally. Might not happen. A lot of times we miss trades, just doesn't work in our favor, and that's okay. You're not going to get every single trade. So the first thing I want is I want to buy it somewhere around here. Now if I right click right on this 38.2 retracement line, I can hit a create alert withdrawing option that's going to buzz on my phone. It's going to tell me, hey, it's crossed below that line. But I don't really want it to cross below that line because then it looks like the momentum is dying and it's heading even lower. I don't want that. I want to be able to buy the stock somewhere around here. But ideally, it won't cross below, right? Because if it crosses below, it has more momentum or it has more downside potential. So what I do is I come up a little bit higher. This is where I want to get. And the reason, by the way, that I'm not putting it down here is because it's a little bit less realistic to assume that it's going to retrace all the way back down to this all-time low. It would be great if it did, which I'll get into in a second, but I don't think it's going to happen. This is much more reasonable to me that it'll have a little bit of a sell-off, consolidate somewhere where it had the most recent consolidation period. So instead of setting my cross below here, right, because I use technical analysis more as an approximation, it might not cross below. And like I said, we don't really want it to cross below. So what I do is if I set an alert here, tell me when it crosses below. If it doesn't cross below, I won't get an alert. Maybe I forget about it. Maybe I don't make this trade. So what I like to do is I like to come up a little bit higher. So you can see right over here where it says 431 as I move it up and down. I'm going to set it there. I'm going to right click, create alert withdrawing, and I'm going to use this price level tool. And I'm going to drop it right there, and I'm going to create my alert on that drawing, cross below that level. That way, when it does cross below this level, if it does, it can give me a little bit of time to make a decision, to look over the charts, and decide what I want to do. Like I said, it might not cross below this line, so my alert would never go off. It might consolidate right around here somewhere, somewhere similar to like what it's doing here. This just is a little, it's not really a hack. But it's just something I do to give myself a little bit more time to make a decision and look at the charts fully. Now, it doesn't mean that just because it hits this line that I'm going to rush in and buy, right? What I want to see is some consolidation, some sideways movement here to show me that the selling pressure has stopped. It might, over the course of several days, push a little bit below, come up a little bit higher. At some point, though, when the Bollinger Bands narrow and everything looks like it's consolidating sideways for a period of time and not selling off anymore, I'll consider making a trade if all the other technical analysis that I use, like relative strength down here, if it all looks good. If it all checks out and everything looks like it's heading in the direction that I want, volume is moving, increasing, the stock maybe is moving back up, then I'll make a trade. On the other hand, it might actually cross below, at which point, even better for me. It also means more time waiting, which is, people always say, why don't you live stream your trades? Because swing trading is kind of boring. You just are waiting, right? Like right now, I'm waiting for the stock to get down to $4.31. but it's 454 right now. Might not happen today. Might not happen on Monday or Tuesday or Wednesday. It could take days to get down to this level. Or it could just fully reverse and shoot back up, at which point I missed the trade. Or at least I missed it on the way down, catching like a rebound. I could make a momentum trade, like one of these, for example, jumping in on the momentum, buying it at around 405, jumping out at 442, waiting for it to consolidate again, and then making another trade, say around here on this breakout at 447, selling it somewhere around here at 480. And you might be saying, well, why don't you just sell it at 5? Because, you don't know. That's why I always say you have to have a goal in mind, an amount of money you want to make based on how many shares you're buying. So if you're buying 200 shares, calculate out what would a 30-cent gain be. Is that a gain that I'm happy with? What would 1,000 shares be on a 30-cent gain? It would be $300. Would I be happy with that? And then not to be so literal with your targets, right? If your goal is $300 and you're at 275, you know what I'm saying? Close enough. Take it. Also, though, you might want to look at the charts and make a decision before you just take it. Like, does it look like there's more momentum? Does it look like there's more upside potential? If there is, maybe you take half. Sell half of your position. You have 1,000 shares, sell 500, and let the other half ride. Anyway, I'm getting off topic here. If this thing crosses below and it has more downside potential, then I won't make the trade, which is why I like to give myself some time to look. I don't just rush in because it hits my support line. If it does break and it drops lower, maybe it forms support here. Maybe it forms support down here. And it trades sideways. I'm looking for a sideways movement like this, like we see over here, sideways, sideways. Anywhere that it consolidates is where I'll consider making my trade. So, would it be great to get it down here at a much lower price point? Of course. But is it realistic to assume that it's going to go all the way back down? Probably not. It most likely will consolidate in this area. And like I said, if I'm wrong, great, this benefits me because I can get more down here. But also, I don't want to start buying and then sitting on a loss. You know what I mean? I don't want to buy it here and then have it drop a whole dollar. That would be a humongous loss, at which point I would probably cut and take my losses. So this is what I mean when I say trading. It's a little bit of a waiting game. It can be kind of boring. Anyway, I hope you thought this video was helpful. If you did, hit the bell, hit the subscribe, hit the notifications, hit all the buttons. Thanks for watching. Have a good day.